Daily trading and one-minute chess may seem like polar opposites, but they share surprising similarities in how they demand speed, preparation, and emotional control. In one-minute chess, often called bullet chess, you only have 60 seconds on your clock. Moves must be nearly automatic, leaving no time for deep calculations. Instead, you rely on pattern recognition, quick instincts, and a well-practiced arsenal of strategies. Day trading can feel just as frantic. Prices fluctuate rapidly, especially for short-term traders or scalpers, and a moment's hesitation can mean missing out on a profitable entry or exit. Like the bullet chess player who studies openings and endgames in advance, a day trader prepares by analyzing charts, setting watch lists, and planning trades before the market even opens. When seconds count, you can't afford to figure everything out on the fly. Both pursuits also hinge on emotional discipline. In bullet chess, a sudden mistake or unexpected move can spark panic. You might rush your next moves and dig yourself into a deeper hole. In trading, you face swings in price that can trigger fear or greed. The challenge is the same. Stay calm, trust your plan, and avoid knee-jerk decisions. Finally, both bullet chess and day trading involve careful risk management. In chess, a poorly thought-out sacrifice might hand your opponent the advantage. In trading, taking a position without a stop-loss can jeopardize your entire account. Success often comes down to balancing aggression with caution, knowing when to push forward and when to protect your position. Though one field uses pawns and the other uses stocks, both demand rapid decision-making, thorough preparation, steady nerves, and a willingness to learn from mistakes. If you sharpen these skills in one arena, you may find them incredibly useful in the other. After all, both are games of high stakes and quick thinking, where strategy and self-control can make all the difference.